All right, welcome back to the Bullish Bears YouTube channel. Today we're going to do something a little different than throwing shade on Kramer. We're never going to stop that, but we're not going to
Yeah.
focus the show around it. Well, typically we would go through probably 10 or 12 Kramer stocks and find one or two that are actually interesting. In this series, we're going to do something a little different. We're going to show you what we find interesting only, and no one really gives a damn what Kramer thinks anyway. So, you know, we got plenty more goods to offer than Kramer would in that respect, and we don't have to waste time weeding through all the crap. We can find good stuff for you. So we're
Yep.
kind of talking about going back into maybe doing a little bearish trading on the VIX, and UVXY pops up almost always as something that gets overextended and we can maybe short it. But we're also like, you don't want to short the VIX because it can absolutely eat your lunch.
And it will. I mean, you'll
Yeah,
be carried out on a stretcher at some point.
pretty much. Or it'll at least hurt enough to where it'll put you in a hospital for a couple weeks until you recover. But you'll never financially recover from that. Don't short the VIX. But these ETFs based on them can tend to have a little bit more outflow over time anyway. They're designed to go to zero after all eventually. And one would think you could just keep buying puts on it, but that gets a little expensive too. So you kind of want to split the difference, maybe look for spreads. And spreads don't really work effectively on that as well as you should. So sadly, outrights at the money seems to be the way to go with these type of things, and it just seems to be the best bang for the buck when it comes to going bearish on something like this. That, and we got to pay attention to news, and that takes a lot of focus and a lot of stress to watch the news and deal with the keeping your emotions at bay, trying to chase stories and stuff, and be like, oh God, the Middle East is about to explode. So what? It's always about to explode. Kind of counter yourself. Don't get emotionally involved in the news. Pay attention to it, but don't get so drawn into it that you make rash decisions, because price action trading requires a bit of a mechanical focus rather than an emotional focus. What you're looking at is other people's emotions and trading upon them. So that's the idea anyway. So with something like UVXY here, we're looking a little bearish. It's a bit overbought, and we do have what's it, the jobs report tomorrow coming out? I didn't even look.
Jobs report is coming out tomorrow, and today we are now selling off, most likely under the assumption that the whole idea of the Fed being able to create a soft landing is bullshit, if I can say that.
Yeah,
So the jobs number is going to be important from that standpoint. And I think it is highly unlikely that the guys who missed inflation are going to get kind of the unwind right. You've got the bond market basically telling them that they should already be cutting. So yeah, the jobs number could shake things up a bit.
we did notice that TLT took quite a jump this morning. So yeah, that was pretty much that answer in the bonds market, and that's almost set up for a reversion trade. I mean, we're looking at TLT possibly pushing up to like 110 if it gets out of resistance here. That's an eventuality, and it's about where the 200 week is anyway.
Yeah,
Um,
I mean, I just went short TLT, um, kind of under the assumption that it's not going to break through that, or at least hold above kind of those highs it made back in March. So we'll see.
right on the weekly, it's got that potential to run up, but yeah, it's not going to be a run per se, and probably a good idea to be in at least a short term short for this at the moment. If you think about this on the daily, it's more of a cup and handle setup after a bit of a V bottom rally here. So
But before we leave it though, going back to the VIX for a minute, the other way to do it and the way that I do it is when the VIX rips, I'm going to buy puts, again, not short, on either VXX or UVXY. Really, whichever one is trading the best. Usually it's VXX, because and the reason they're designed to go to zero is they do the VIX futures,
right,
and there's contango. in there. So they're losing money every single month on the roll of the futures, which is why, spot Bitcoin, for example, was so welcomed out there versus the futures version. Spot is always going to do better than the futures. So with
Right.
the VIX,
Less Contigo.
you've got an instrument that's flawed to begin with. And the cool thing about the VIX is, unlike a stock or the market, you need a reason for it to stay elevated. If fear subsides, the VIX is going to crumble. So, if you don't already have puts, which I do, I'd be looking to buy puts on one of those instruments today.
I agree, and that's the whole thing. And once people overreact to things, that fade afterwards is pretty simple. It's very similar to a short squeeze. You get stuff that pops in penny stock land, and then it spends the rest of the month fading back to its 52-week low. Very typical. And the same thing happens when you get something like a fear index based unit running out of control, and then eventually they come back down to earth. It's just kind of inevitable. I mean, you look at that long slope. This isn't your typical market structure. This is designed to fade. It eventually will hit zero, and then they'll do another split and keep it running. It's designed for trading, and it's trading the index of fear. So yeah, effectively, it's going to eventually fade to nothing. And it's about to approach $50. Cool. I kind of like the puts idea on that. I would be even targeting a little bit more than a reversion trade down here to like $46 on that thing. That's pretty sweet spot to get back to. But if I were to be a reversion trader, I'd also look at this pivot right in here, about 47.40 or so. So I'm looking at VXX, by the way. Right on. Well, should we get into our swing trade watch list? We can start with you, or we can start with mine. I got like 4 of them, and realistically,
Go ahead.
Realistically, I don't have a whole lot on my radar today. Believe it or not, I'm kind of a little bit at a loss for finding decent swing trade setups for me. But I'm a guy who likes to trade a lot more range, so I kind of focus on the stocks that aren't moving like $2 or $3. I want like $5 to $10 typically, movement wise. And one that kind of got away from me, and I wish I could have popped off an alert on it yesterday because I was watching it and I looked away. Shake Shack, man, this thing was just a methodical setup, and I totally forgot to call it out. Before we were looking at a nice measured move to the upside. It came back, made a perfect reversion, found support and bounced, and then the earnings call came out and just knocked it out of the park and went right back to the 86.6 fib level thereabout on this pivot here at 105, and it just creeped right up to that this morning in the pre-market. And we were watching this thing. I called it out to the group as a quick day trade at about $100, and I was targeting 105, and it nailed it. Now I'm looking for a fade, maybe revert to about half that move, maybe visit like 99.50 again, and possibly continue on. You pull up the monthly chart actually, and you can see that these previous all-time highs back here are going to likely be pushed if this thing continues to trend. And if it gets outside of this 105 pivot with some force, half a measure move happens to be right in a key pivot here at about 122. So certainly keep an eye on this one. It's got the setup to continue a little higher.
The one thing I'd add here, and I'm not a breakout trader, but when I do trade stuff like this, I would use 99.50, which is the low of the day, as a stop. I mean, not 99.50, but somewhere, 99.40, 99.25, something like that, where, I'd personally, I'd be out.
Yeah, right in the neighborhood of it. And the day trade's already pretty much done for the day. We know it's likely to fade and come back to support, but long term, I think it could continue up into those measured move targets, but it's got to break a key resistance.
Holding on to this longer, again, 99.50 would be the level I would watch to invalidate that move.
Definitely, and that's where I'd be looking to enter a swing trade. And I hate to call out something that I missed to get an announcement out on, but the setup was just clean, and that's the kind of stuff I look for, is these really nice measured moves that come back for reversion and then test support and bounce out. So I thought I'd put it in my list as something to watch for continuation later after a good pullback, because earnings calls tend to be over exaggerated. They love to give back about half and then bounce again. So, we could even see this thing come back into like 92-ish if it finds support there and give us another setup. So it's something to keep an eye on. Definitely don't take your eyes off of this thing. And then the runner up to that effect is my other, well, I guess it's been on good old Kramer's list for about ever, but it's a fun stock to trade, and thusly it has pretty clean setups. It can be difficult for some people because it tends to be a bit volatile, but without further ado, Chipotle here, set up beautifully on the weekly chart. Nice little tweezer bottom in a perfect spot on a reversion of the previous bull trend. Short term, you're looking at a bit of a pop to short back down to the pivot around 53.50 or so, and then maybe see if we can continue to run up for a reversion of the previous bearish part of that pullback, and maybe see about $58, $59 target. And I know you're currently short on this one.
Yeah. So watch the 200-day, because to me that invalidates the long if it breaks below. I am currently short. It's one of my short-term short models. So, I mean, if you're right and it goes up, I'll stop out. But yeah, I'd watch the 200-day there. It failed at the 20-day EMA today. So far, so good for me on the short side. But if it stays above that 200-day moving average, it does, eyeballing it, look more like a long than a short to me.
Yeah, at a glance, I mean, it looks like a reversion trade setup, pretty much textbook. And we just got to watch the area. So I think, if we hold support around where we're talking here, where your short target was, and where you'd stop out, that liquidity is right there. And if we hold here and we start to continue out of here, we get a really nice clean move to the next liquidity zone, 57 to 58 bucks. So it's definitely on my radar for a short or for a swing trade, bullish. Just waiting for support to happen, and looking for a continuation later into next week. Mind you, we did have quite a bit of an earnings call generate a nice wick there, and then it got revisited, and you can see this whole spike here. We used to, when we see that at the top of a trend, we used to call that a high wave, but it can also give you kind of a relative target, because it essentially gives you that reversion target, plain as day. Will it fill that is the question, and there's a high amount of volatile liquidity available from here to here. So this is where a swing trade setup is. If this, then that. If it starts to consolidate here and break into a bullish trend, we know where the targets are. They're pretty easy to find. Not to say that reversion trades don't repeat, but sometimes when you've nailed that reversion target with a wick this fast, it can invalidate it and cause a short setup where you can go and retrace back to the next low. Well, that is all the way down here. So far the weekly set up for a bullish trade, but only if continuation happens above this liquidity zone. Otherwise, we could see it revert a little lower and tap into support around 45, 46 bucks. So certainly going to be on the radar for some swing trading. And I think this is just one of the setups where it's not the best setup, and I've been at a loss for finding really primo setups this week, aside from Shake Shack, which I overlooked. But effectively, we're looking at possibility of a good setup here for a good long. And then last on my list, two things on my list. Everybody's looking at NVIDIA, so we might as well start there. Same kind of deal, only we tapped into a key support area methodically the other day, and then yesterday's roaring rally, everybody jumped in and chased it right to a reversion target, or just about to it. And then we started giving back. Well, about half, we're going to look for support around 110.50 or so, or maybe hold up to the top of this critical liquidity zone, which I marked out on the daily from way back here, this candle here. This was the danger zone. If it broke that, we're likely to hit the top of this gap. And if it fades, that 102 was where I picked it up and took a swing on it. I'm looking for, if it snaps that and things really fall apart in the chip world, that gap's pretty obvious right there on a daily chart to come back down and hit that 94, 95 area. And the 200 days cruising around 80. So, I mean, it'll either be a good short or a good bounce for a quick overnight or in the next week's swing trade, but we're going to watch this level carefully at about 109 to 107 and see if we can stretch this a little bit.
So on Nvidia, I sold a whole bunch of my Nvidia yesterday. Sold a little more first thing this morning, luckily, and just I have a small. I would be watching the 50-day 120.23. It failed right at that this morning. If it can't break that, it does look like a short. I would be careful shorting Nvidia. I think there are other things I'd rather short than that. But I wouldn't be buying it unless it can, pull an undercut and rally at the 50-day, which is at 120.23 level.
Agreed. That's where I'm looking. So it's got the potential for a decent bullish swing trade, but it's got to hold that critical area. Otherwise, it can become a very rapid short. So keep eyes on the tech sector and the chip sector for some volatility is what we're saying, and it could go either way. But potentially, it's a decent reversion trade setup, but it can also be a good short. So be on your toes. Not to say that my man over here doesn't have a couple of ETFs based on 2x leverage with Nvidia. So
We did have record inflows into the inverse yesterday. So whoever out there did that, kudos to you guys. That was a great trade.
killed it. Very nice. And I'm looking to maybe if we revisit that 102 again, I might stack a few NVDX in that area if it holds. But like I said, it could also be a very quick short. So it's a very dangerous stock to trade, but I love that volatility because it moves really nicely, makes some good outside moves. In the meantime, generally it's still looking bearish until it isn't. So just be cautious with this one if you're going to be trying to run a bounce play on this thing. But it certainly gave us a nice swing yesterday. Lastly on that list, and this is kind of one that's kind of out there a little bit, Exact Science Corporation, EXAS. That thing went ballistic, popped up on our gap scanner this morning, and nailed liquidity zone up here at 58. I mean, it was just a beautiful bullish day trade so far. As for swing trading, that is a reversion target anyway on this trend here. And this is just basic market structure. You got the hype wave, the pop, the capitalization, comes down, consolidates. Very likely to give some of this back, so this may end up giving us a quick short overnight, maybe to about 54, maybe 53. But if it gets through this liquidity zone, there's also a pivot high on this consolidation from about the middle of that trend. It can push to like 62, 63 bucks. So, be a little nimble if you're going to try and scalp this thing. But the day trade was beautiful. I mean, we could not ask for
Where it
better.
is right now, it looked like it wanted to blow through the 200-day. It failed. It also failed at a couple of key levels if you're looking around that gap back in May. So I'd be careful if you're buying it here,
Yeah,
already up 23.88%.
yeah. Don't go chasing something like that. That's a hell of a gap up overnight anyway. So, the day trade setup's good. Swing if it can hold this range and maybe give us consolidation for continuation to that upper range pivot. Cool. If not, it becomes a great short. So this is on my radar for a swing either way. And I think volatility-wise, it's pretty much paid for itself over and over again for us day traders anyway. So we always watch this one. All right, ready for your list, sir.
All right. One name that we didn't talk about pre this, but I just kind of pulled up and was like, holy crap. Take a look at Cree and look at today's bar.
So you see our
ARE. It's a regional bank.
KRE, that's right. I always forget about that stinking ETF. Whoa.
Yeah, I mean, I've been pounding the table for a while. I mean, Cree has had a move like it was an AI stock,
No kidding.
and I mean, it was bound to do something like this. This looks like a great short here to me.
We could
But
see that thing slam half that bullish move down to like 53.50.
yeah, I mean that move that it had through July was just crazy for regional banks with all the stuff that's going on their balance sheet. I would have been shorting that all throughout. I mean, I move in and out,
Yeah.
based on, oversold, overbought. But if I were more kind of swing trading, I'd be shorting the hell out of that thing.
We got this bar right here saying we have a quick range trade if we break that level. That's that bar from July 16th there, the opening range bar on the 2 hour. I like it if it accumulates here and gives us a really nice measured move to the bear side. We could see that 53.50 target get nailed real quick.
Yep.
And I know Kramer's been pounding the table saying buy regional banks, so this is
Yeah. I mean,
perfect setup.
Kramer's awful on regional banks.
Oh yeah, this his record shows, man. We don't need to even say it. It's just everybody knows. Nice move on that one. Yeah, I think we could even see that fade a little further if it starts to break that 53.50 area. We could see it, push a whole gap down here to like $52 even. Nasty. Good bearish stuff.
Yeah.
And then
Another one that I'm looking at is Alcoa AA. Now that looked really nice to me this morning because it had an undercut and rally at the 200-day moving average, getting its ass kicked today along with everything else. So, I mean, right now I would not be buying it,
not yet.
but if it can come back up above the 200-day moving average, that's something that would be interesting to me.
It's been an interesting one. I mean, we can see, market structure did its thing. I got a lot of old dope on this one. I've traded the crap out of it in the past. As far as this move back down, we've got the consolidation. This looks like more of a short squeeze type of thing if you were comparing to penny stocks where it hit that high, came back down. It's given us a reversion. So it's set up to where if we do have a nice reversal, this is where we're going to look for it, right in that target, right in that liquidity zone range, around $31 to $32. And yeah, it's very obvious. I wouldn't be, up and buying it right now, but I'd be watching this closely for a reversal in this area. We could easily see a nice little double bottom, and then I like to look at these as a series where you look for a break back above the mean between the low and the high. So like kind of split this low and high here, draw a line across it, and that can be your signal. If you see a consolidation down here and it breaches this and starts to trend up, first target's easy to find. You just look for that high range, find the nicest, cleanest looking wick, which is today on a 2 hour right there. And you get two trades. So you get a consolidation, a break. This is your first target. If it rejects here, we can be bears. We can short it. If it holds above this and starts to swing high, we go to the next high on the double bottom, so to speak, here, and that becomes a liquidity zone. And then if we break out of that, we can be bulls. We can change our mind just like the market can, and run up for a reversion target up here at about $37. So it's got potential to be a good bull swing later, but let's see what it does with today's beatdown, and not necessarily hope for the best, but be ready for the best. So if we see a good setup, we'll definitely keep that on the radar.
Yep. Another one along those lines is Freeport McMoran, FCX. It's a copper name. That had an undercut and rally yesterday at the 10-day, selling off again hard today, but the 200-day here is held. Again, I wouldn't be buying this right now.
Right, wait
but
and
if the
see.
200-day holds, this is something that would be, really interesting to me as well.
It's a pretty good setup, and I look at the weekly chart and I set that pivot up. A long time ago, I had this wedge drawn out, and it gave us that breakout of that wedge just beautifully. In fact, it stacked a full measured move out of it. Right now, we're right back to a key pivot area, right at the top of that range from that wedge on the weekly there. And I've been waiting for this because I was able to catch only about half of this rally off that wedge break. I'm looking for that return off the breakout target from that wedge, and this is typically a slam dunk. If it holds support here and gives you a reversal, it's likely to go and nail that 86.6 fib, which would be right up in here about $53. So that's a $10 move from the base here, roughly. and a 200 period happens to line up right with that pivot. So this will definitely be a nice setup for either a bullish reversal off this bottom and run back up, or if things hit the fan, it can also be a bear flag. So this is a critical area. If it turns bearish, we can go and revert right back to two targets. We get our angular support from the previous wedge right in here, and angular support from our previous resistance on the wedge here can be a little bit further extended, and that would take us to a 200-week moving average. So watch this one for a very good setup of either a reversal or a bear flag here. This is the key spot to watch it, and it can give you either side of this. We know that when the sky starts falling in the market, it doesn't stay falling forever, and things tend to pull back and eventually perform. So more likely to bounce here than it is to break here, but either can happen. So you got kind of the 60-40 rule applies to that. 60% chance of a reversal and a bounce, 40% chance of failure in a short. So yeah, I would definitely be watching this one. And then you had one more that you mentioned.
One more. So, AI is obviously the future. It's the 800-pound gorilla.
Yeah.
And you need semiconductors to make that work. So the semis are going to move, and they're going to move a lot. Today they're getting their ass kicked, but at some point we're going to see a reversal. The name I like there is Lam Research, LRCX. Again, I wouldn't buy it here. It's down over 8% and it broke through the 200-day. But if it can get back above the 200-day, this could be something interesting to play for a bounce. There are semi names that I hold in my long-term portfolio. This is not one of them. But if you're looking for a trade, something to bounce when semis come back, I like this setup.
It's pretty good. And in the past, I mean, this at some point ended up on Kramer's list because I have our old dope right here. We made the nice measured move trade on that twice. I mean, it gave us a primary hit under the target, so it gave us the bull move here. Came back, made more or less a reversion trade, and then bounced back out. And we're right at that pivot from the top of that block right there, just about 827 is the mark. And if it holds there, we can make a very nice swing for a reversion back to about half that high, about 975, 976. I can see that pretty easily. Yeah, definitely, don't go chasing after this thing, but it's set up to where it can make a hell of a run if it reverses here. And that's a nice move. I do like that because that's got a lot of range. That's quite a bit of movement dollar-wise and percentage-wise. So I'll have to go look at the options chain on that. I bet it's got some nice spreads. I might play that one. Looking into a couple other basic stuff, basic things. We've been trading QQQ this week instead of SPY because Q is just a little smoother this week. Plus, we've been getting into yeah. Well, we get into day trading the futures, and we like to use QQQ and SPY to kind of correlate those because it's one, I like the drawing tools on Webull better than Tradeovate because I can actually access them and put them out real quick versus Tradeovate. It's a few extra steps to get drawing done. But the other thing is you get that gap period between 8 p.m. the previous day and 4 a.m. on the day of open for ETFs. And it gives you like an easier way to spot where you'd expect a trend to trade. So like if you revert the London high or whatever, you can eventually get some nice gap fills. And the idea is we can trade those pretty simply. I mean, this morning we had a nice run up to the high. I was expecting rejection somewhere in there, and we got some very nice bearish trades. And then the liquidity zone went B to A, gave us a quick reversion, and then south it goes to the next pivot. All that stuff is easy to draw out. You really look for these gaps and that difference between that close and that open, and you can find those trends usually repeat very easily. Now when you go to trade futures with this, you just literally scalp. You can buy to open or sell to open, and buy to close and sell to close. It's like trading options contracts, but the delta is fixed. It just gives you a fixed multiplier. So us futures traders love this kind of stuff. And then at the same extent, us options traders who can go and trade those really short-term options plays because there's 5 expirations on both SPY and Q every week. You get some really killer short-term options trades. You can go and run next day expiration or a couple days down the road and just scalp the momentum on the volatility and do very well with it. You don't have to trade the equity here. You don't have to put out, $460 a share to get play in this thing. You just scalp the fractions on the options and make some pretty good plays. So as far as support goes, we're looking for about 462 on QQQ here to maybe hold, and if it doesn't, we got a pretty easy drop right down to this next zone here, and we're kind of watching this. If things start,
I got 457.53
as a reversion trade, that looks about right.
as a possible support area. That was Tuesday's close.
Right.
So basically, if we blow through that, we've retraced all of yesterday and then some. Plus the fact we zoomed above the 50-day moving average in the morning and then blew right back down. So right now looks pretty ugly.
It does look pretty ugly, but we get some scalps in there, and if we start to see the major indexes QQQ and SPY start to form any kind of reversal in either of these zones, that's when our swing trades start to come into life, and you watch follow through on those as well. So one leads the other, but inevitably they all kind of move in the same direction. So we're looking for either reversal here or reversal here. Pretty simple. If it doesn't, well, look at the weekly chart. That has been one hell of a rally for quite a while, and we're in reversion of this trend here just about. We wicked it this morning here. If we break that, we certainly have many other reversion targets to the left to revert to, and I don't think the sky's going to quite fall on this thing, but it's nothing we haven't seen before. So if we start to form a bearish trend out of this and we start to repeat these reversion trades, they become easy. And if you look in the past here, you can see all of this, we call this the QE rush, the whole range. Fake market.
I would agree. I think worst case, we get a move like April.
Yeah.
That's a buying opportunity. I think you've got to understand where we are in things. We know the Fed is cutting in September.
Yeah.
And we know that they're going to be embarking on a cutting cycle. And we know trying to fight the Fed doesn't work.
You can't short the Fed.
Short of something coming out of left field, I think worst case scenario, again, we get like a move we saw in April. We don't get Armageddon here.
Right. Someone nicknamed another thing where it was the crash prevention patrol or something like that. And it's kind of...
Yeah, I think plunge protection.
Plunge protection, yeah. And it's essentially, it's just one big wave of QE after another, and they just have, places where they can plot it in or plot it out. And, they start rattling the saber of, hey, we're going to cut rates, and I got to wonder, are they going to maybe play with the market bets on that? Because it was like 100% chance of a cut pullback or a rate cut, and then they dropped it to 80 yesterday. That's where the consensus is in the market. So that ends up pricing into the chart. And, we're looking at consolidation at this point. So, yeah, anything goes in this day and age. And, if we break support, we know where bearish base targets are. If it holds support, we know where all the bullish reversion trades are. We can trade that all day long. It's what we do. But in the meantime, we get the Fed stepping in and we get QE and we get some artificial movements. And, when we look at that weekly chart and we realize that, that was just, a damn near 10-year long rally, that whole thing. So eventually things got to go in and give back a little bit. And although the market eventually, inevitably just keeps going up and up and up and up, pullbacks are natural and they have to happen. It doesn't mean it's the end of the world. It doesn't mean it's going to be the worst famine or, Dust Bowl or Great Depression of all time, but things do happen. They do move. So, look for volatility, and volatility is opportunity for us day traders and swing traders alike. Some of us can profit from failure and others can profit from success. And either way, that volatility gives movement, and movement is what pays our bills. So that's what we're going to do here every week. We're going to give you the moves that are setting up to pay the bills. I think we can pretty much wrap it on that, unless you got something else you want to mention.
No, I think the only other thing is, you've been trading Qs, I've been trading SPY. Just actually bought a put spread this morning. Unfortunately, didn't buy enough of it, but SPY's hanging above the 50-day, and it is not far. So the 50-day is 542.92. So that's something I'd be watching as well.
Agreed. Yeah, I kind of like that setup where if we consolidate in this area and we start to bounce, we can start seeing it revert right back to that 552.50 target. That thing's been kind of a key point for a while now. I like it. Let's look for reversals. I think we could see some pretty good splash plays.
Yeah, gonna depend on jobs.
Yeah, that too. That's going to be some interesting data coming out tomorrow, and I think that's going to be a bit rocky. I would almost.
Yeah, I mean, it's not going to be real, and they're going to be revisions to all the previous months.
Oh, I'm sure.
The market will trade based on whatever it is.
Pretty much. And I know that some of the options traders will be into doing strangles and condors into something like that. But you got to understand that the way options are priced, they're designed to provide the highest probability of expiring things out of the money. And
yep.
If you look at something that has such high implied volatility like that, it's better to be almost better to be a credit spread seller than it is to be a debit spread buyer in this environment. But that doesn't mean you can't calendar spread. And us technical guys with the option stuff can look for maybe running a monthly expiration strangle and then selling short calendars that are like a couple days expiration out, playing this volatility up, and then ride the long wave out of it. So
you bring up an interesting point. I love calendar spreads on SPY puts.
yes,
Where I'll sell, like when you see a day where the IV is just juice,
mm-hmm.
I'll sell that and I'll buy out a couple of days later.
Yep.
I love doing that.
And it's like, and the cool part is you get to keep a hedge position running while the short-term selling against it pays for it. So you're reducing your cost basis on the long put position. That's like right out of my homepage, man. I love making my cost basis go down. So that's been a go-to for me, whether I'm long equity or long artificial positions, and puts can be done with that as well. And that's an old school thing that has never lost popularity is that whole buying a put way out when you see price a bit overbought and then selling the short calendars against it to reduce cost basis on it while you're maintaining a hedge. It's like getting paid to hedge your long positions in your equity book, in your portfolio. So it's a neat strategy, and it's tried and true. SPY spends more time going up than it goes down in history. So if you want to sell some equity on or some premium on puts, that's the way you do it. And to boot, you can do synthetic neutrals, and that's totally another thing off the scale. I've done this with a couple of equities directly, and it worked out really well, but it can burn you if you're not smart with it. Where you go and you sell a deep in the money put credit spread in an area where price will eventually get to. Take assignment on the short leg, and then you can sell covered calls against your long equity while still having a deep in the money put to hedge your position. The only downside is price movement keeps it balanced. It's neutral. So you're generating nothing but premium on that. Price appreciation or depreciation does not matter in that scenario. But it's a neat synthetic trade. It just takes a lot of outlay. So similar stuff, and there's many ways to skin it. Options are all about it being able to adjust things more than just.
I love options, as I know you do as well.
And it's my forte. It's what pays my bills mostly, and I do a lot of really weird, complex stuff that I might be the only guy it makes sense to sometimes, but it's working. I wouldn't be here if it didn't.
There you go.
So stay tuned. We'll give you some more swing trade setups every week, and just be nimble out there in this environment. This is going to be a very volatile market, probably at least for the next few weeks we can foresee. And then coming out of it, we will eventually find some good trend trading. But for now, the swings are going to be pretty wild, and that's what we're here to do, provide some swing trades. Thanks again for joining us, everybody. I think it's cliche to ask for, the click on the bell and the subscribe and all that crap. Just tell your friends. That's all I ask. We don't need to be.
And if you have any names that you want us to cover,
Absolutely.
feel free to reach out.
You can either, send us a message after the video posts, or heck, we're live now. I see a comment right now. Where do we have to buy gold? That's a good question.
Gold.
Everybody's been buying the crap out of gold this year, and it's funny. One of the things I look at is I look to miners. Who's going to really be making the money? It's the producers, because when the price gets pushed up, miners just move around. As far as gold futures go, that's kind of the other go-to, and then there's physical gold.
I like silver better.
I do too.
Right here.
And there's a reason for that. When you're looking at gold, it's such an enormous outlay versus silver. And the other part of it is silver may move in smaller zones, but it's bigger percentages. So you get better swings. Swing traders or options traders, pardon me a second.
And while you're clearing your throat, I like the setup better.
Yeah.
I mean, gold, I think if you're buying it here, you're a little bit late. And I mean, I trade options on GLD, so I'm looking at GLD. You're coming up to the July highs, which, maybe it blows through and keeps going. But I'm a mean reversion guy. I'm not a breakout guy. When something is coming up against the, recent high, I start thinking double top short sale. So I just like the setup, and I also trade options on SLV. I like the setup on SLV better. I liked it better when it was above the 10-day moving average. Today it broke through, but if it can break back above, you've got a couple of nice gaps. You got the 50-day up there. I think you've got more room in silver than you do in gold.
I like it. I'm just looking at SLV now. It looks like the weekly candle is going to close a nice doji, a nice spinner. And it's right at a support area of a reversion target. So, yeah, silver could give us a nice reversal where it's at. It did break the 10 period, but it's sitting exactly on top of the 8 period. I like to use 8 period. So I kind of like it here. I think I might watch that one for a good swing going into next week. And tomorrow's data should give us a make it or break it setup, I think. I like silver. Silver's good. Target-wise, let's go with a 2-hour target. Swing would be like $26.80 to $27. From here, extensions go right up into about $27.50. I kind of like that too. I'll put the liquidity zone right about there. Good eye, sir. And thanks for the comment, by the way. I saw it live and I wasn't able to respond to it till just now. I appreciate your comments. And like we say, reach out to us. We'll look at anything. We don't care. This isn't going to be like the call-in show where, people call in Kramer and he hits the soundboard and basically tells you nothing useful. No, you give us something, we'll give you full analysis on it, hands down. It's not investment advice. We're not like, here to tell you to buy or sell. We're not Kramer. But we'll show you what the technical analysis looks like to us and kind of walk you through how the setup looks for us and whether we like it or not. We'll tell you. All right. Well, thanks again, everybody. Have a wonderful week and be nimble. It's going to be volatile. Sit tight. We'll have some good plays. Thanks again.